me, Mr. John Rice, the Vice Chairman of GE, right here on ET Now, a very, very special guest. Thanks very much for speaking to us. A pleasure.
Thank you.
Let's talk about Davos. The mood seems to be more buoyant than it was last time. Is this because the world's economy is really improving, or do you think this is a new normal and people are accepting the reality as is?
I think there are aspects of the world's economy that are a little bit better than they were last year, but I honestly think that the bulk of it is that people are accepting the fact that there are challenges in some countries that are going to take a while to be resolved. The governments have to deal with big borrowing and debt issues, and that really is the new normal, if you will. So I really think it's part of that.
You know, before I get to the corporate angle of it and before I get to quiz you on, what are companies like yourselves doing about it, let's just talk about the global economy at large. If you compare Davos, for instance, from 2012 to 2013, the big threat, whether the Eurozone will survive or not, has gone. U.S. elections are over. I know there's a debt ceiling that's looming large. China hasn't had a hard landing.
Right.
All of those are issues that bring respite, don't they?
Well, look, I think that if you look at our company, we live in a world where the waters are choppy, and yet, 4 billion of the world's population live in countries that are growing at 5% or greater, including India. And that means that there are going to be lots of opportunities. It's challenging, it's competitive, you have to be good at what you find growth. And I think that's really the message in today's world. If you're really good at what you do, you can find a home for your products and services.
Oh, absolutely. But before I talk to you about the products and services and a new home for all of those, let me ask you this question, and this really emanates from what we have seen in the past. The world has seen a lot of pain from 2008 onwards. Considerable amount of pain, developed world, the developing world, everybody's seen pain. What are the lessons that you think have been learned, both from a larger economy point of view and also from a corporate point of view?
Well, one of the lessons of the global financial crisis is you can't take things for granted necessarily. I mean, there were aspects of that came from financial institutions and companies in some cases, assuming that a certain trend would last forever or for a long time or for the foreseeable future, and obviously that didn't turn out to be the case.
Apart from that, what are the lessons companies like yourselves have learned?
We have to be able to control our own destiny. I mean, during the financial crisis, the markets in some cases didn't operate the way we had been taught to believe they would over the course of time. So now we're carrying more cash on our balance sheet, and we will probably always carry more cash on our balance sheet than we did before the crisis, because we need the ability to control our own destiny if things were to shut down again.
You know, that's a leader in you talking. You've got to be a master of your destiny to be able to control the financial crisis or to be able to control or, be away from the contagion. But the fact is, in economies like today and in worlds like today, where it's such an interconnected world, it's a multipolar world really, isn't it tough to be the master of your destiny? And isn't it frustrating at times? You've got everything right. You've got the best people in business working for you. You've got the best strategies in place, and yet things go wrong.
Well, okay, so controlling your own destiny in this world also means recognizing that governments are going to regulate more, that governments are going to take actions to do things for their population. And so the new reality for us is to invest in the talent to work with those governments, so that we understand where the policies are going and how they're going to impact our company. So the controlling your own destiny really is a second order effect.
As a fallout of this crisis, and I want to ask you this very candid question, as a fallout of this crisis, do you think over-regulation is a risk we run across the world, not just in the developed markets, which have seen a lot of pain, but in emerging markets as well? Governments seem to be in this mode to regulate. They want to be in control. They want to be in charge. I don't know how much of that is right, but do we run the risk of that happening?
Well, I think we do run that risk, but let's face it, governments are going to take actions. If the markets aren't working to deal with the problems that cause wealth inequality or social issues, governments are going to take action. And we have to recognize that and live in that world and be thoughtful about how we involve ourselves so that the overregulation doesn't occur.
Over-regulation doesn't occur. The one question I want to ask you before I move on to GE specifically and to companies at large, despite the economic crisis, in the last few months, global equity markets have been on a rally. I think either they believe that it's going to be a capital market-led recovery, or they believe the macros are perhaps changing, which if you're asking on the ground, they perhaps are not. And you did say that this is perhaps the new normal. Do you think markets are rallying ahead of reality? And again, is that a risky proposition?
Well,
and this is across the world. If you see Europe, Asia, U.S., everywhere.
There's a lot of cash that wants to go to work. And some of that's going to find its way into the equity markets. Is it premature? Are those the right bets? I'm not really equipped to say. But I think what's happening is natural when you look at the amount of capital that's sitting on the sidelines looking for a home.
Let's talk about Europe. That was the big concern in Davos last year. Everybody was worried whether Eurozone as a single currency bloc will survive or not. It has in the last 1 year, and it looks like it indeed will. Of course, there are many doubts whether Britain will be a part of it or not. But let me just ask you, the way Eurozone is right now, the way European Council is right now, how does this impact companies like yourself? Europe is a big area of operation for you. What are your backups? Do you have a strategy in mind?
Europe will always be important for us. And we have to think about Europe as really sub-regions. I mean, Eastern Europe is different from Western Europe. Northern Europe is different from Southern Europe. I think it's wrong to treat Europe as a homogeneous region. Certainly there's the EU, and we all understand that. But the economic activities that are taking place in Europe are very different, and we have to recognize that. The other thing we have to recognize is that with all of the work we do around the world, I mean, the focus is on growth markets and what's happening in Southeast Asia and the Middle East. A lot of the work that we do there is supported by what we do in Europe, in places like Belfort or Buc, where we produce gas turbines and healthcare equipment that in some cases goes to support our growth market or emerging market efforts. So we can't oversimplify the situation in Europe and what it means for our company, and I think that's true in a lot of global companies.
But are you more confident about Europe than you were about 6 to 8 months back?
Well, I know
you don't want to talk about it as a homogeneous unit still, but are you more confident about it?
Well, in a sense. I mean, I think that we're not at the cliff, if you will, and I feel better about that. But I have to. I feel that Europe is going to be a place that, in total, is going to grow, at relatively low rates over the next 3-5 years, and we have to prepare for that reality.
And from Europe, let's just talk about U.S. before I move to Asia and China and your growth markets. U.S. had a fiscal cliff. They've taken care of that. So there's a debt ceiling that's looming large. As one of the biggest corporates in the United States, how concerned are you about whether or not the Obama administration will be able to wade through those crises?
I think we'll get through this crisis. I think that the bigger issue, and it's not just an issue in the U.S., it's an issue with governments in Europe. Can we come together and take on the big issues? Will the political systems, whether it's Republicans and Democrats in the U.S. or other parties in other countries, will they get together, make the trade-offs necessary to take on the big issues? That hasn't been demonstrated in the last year or two, and that's what we have to have.
If I were to ask you in the United States, what's your big concern? Is it joblessness? Is it the housing market? What really is your big concern? If there was to be one tipping point that's bothering you about the United States, what is it?
We're spending more money there than we take in, and we can't continue to do that. I think from a jobs perspective, the U.S. can create jobs. I don't worry about that. And, the point around the world is everybody has a jobs program. I visit 40 countries a year. I don't go to one that doesn't have a jobs program. So we live in a world where we have to create jobs in lots of places. And it's not a zero-sum game. You create a job in the U.S., it's one less job in China, or you create a job in China, and it's one less job in the U.S. We have thousands of jobs in the United States because we put jet engines on Boeing and Airbus planes that go to China.
Let's talk about China, because you've just given me a cue for my next question. People were worried about China, and there's no denying that. People thought there would be a hard landing, but that hasn't been. IMF in its review yet again, I think the day before, has maintained its growth forecast for China. Does that market relieve you? That's a big bet really in Asia.
Well, look, China is a big bet, not just in Asia, but you're talking about a country that's going to be the world's biggest economy at some point. And for a company like ours that's heavily invested in infrastructure and infrastructure technology, China will always be an important place for us. And honestly, we have confidence in the Chinese leadership to really take on the tough issues, whether they're environmental or regulatory, and keep that ship moving forward.
I'm going to ask you a political question on China. There has been a change in regime. I know you do not take sensitive political questions, but this isn't sensitive. This is to do with economy. There has been a change in regime, and many people believe China is looking to open up. They look far more receptive to global economy. They look far more receptive to global ideas than they have in the past. You kind of agree with that assessment?
We're encouraged by the direction that we see in China. And we're an investor, and we want to do our part to ensure that the progress continues.
All right, let's talk about the big themes for 2013. What do you think are the big themes that will drive businesses like yourselves? What do you think are the big themes that will that the GE will focus on?
Well, for us, one of the things I spend a lot of time on is working with our team to make sure that we have the right global footprint. We are seeing growth around the world. It's not coming in all of the traditional places. So we have to be sure that we have people, resources, capabilities everywhere they need to be. And we are looking at doing business for us in 110 or 120 countries. We have to have the right assets and the right people in Europe and the United States, and the right assets and the right people in Southeast Asia and China and Latin America.
Sure. What about businesses? What about sectors that you think will be the big themes that will also be key priorities for you?
Infrastructure, because I think there's more pressure than ever on governments to build out the infrastructure so that their populations see a difference. I've been in 6 countries in the last week and had discussions in every one about the need for more power generation, for better health care, for clean water in some cases. And it's so clear that the pressure these governments are under to make a difference is, and if we want to talk about Occupy Wall Street or the Arab Spring, people now are comparing what they have with what everybody else has. And when they don't like the comparison, they vote. And they may vote with a ballot. They may vote on Twitter or Facebook or blogging. And if governments aren't responding, there's going to be trouble at hand.
Is that the new reality? Engaging with the world out there on social network or on any other platform is a reality that companies perhaps are coming to terms with. Do you think governments around the world are perhaps taking cognizance of this?
I think they have to, because that's how views are being formed. Whether you like it or not, whether it's factual or not, that's how views are being formed. And a lot of the stuff that is written about us in the non-traditional media sources, isn't necessarily completely accurate or balanced. And we have to be sure that you get both, accuracy and balance.
A quick question here on localization. GE does a lot of that. You're present in 120 countries, but it's remarkable how much you localize. What are the challenges for a corporate like you, which is so big, to be dealing with something like this?
Well, everybody we sell a jet engine to wants a service shop in their backyard. You can't put a service facility in every country because the economics don't work, and there isn't sometimes enough engines to make the service shop productive.
Right.
So we have to pick and choose. We have to look at regional requirements, but we also have to be an investor in these countries.
That's right.
Because every country where we do business wants us to be contributing in some way to the development of the society. And that's just a fact of life.
The vice chairman of one of the largest companies around the world. How tough is it to lead a corporation with 300,000 people across the world at a crisis situation like this? That's not, at one level, I would believe those numbers are daunting, aren't they?
Well, we have a lot of great people. So it's not just about one person or 3 or 4 people in GE. It's about thousands. And we develop leaders who understand what we're trying to accomplish, who are excellent in their own right. They don't have to wait for specific direction from me or Jeff Immelt or John Flannery in India, and you know, we work in teams, and I think that's the new model for the 21st century. Business is the ultimate team sport.
What are you essentially here referring to? A multipolar world and multipolar companies with you headquarters in the United States, but you've got small hub headquarters all over the world.
It's a global matrix, and I think people have to be able and adept at working on multiple teams. So you're on a business team. If you work for GE, you're on a business team. You might be on a functional team in finance. You might be on the India team or the Indonesia team, and you serve, if you will, several different leaders sometimes at the same time.
But in a model like that, is scalability a challenge? Is it easy to scale up?
If you have good talent. Okay, so this gets back to the fundamental thing. I mean, we're going to grow faster in places where we can get good people. And, whether that's India or Brazil or Mexico, it comes down to having really good people. And if you have that, the cost of the wages that you pay doesn't matter as much because you're willing to pay good people whatever they deserve.
Sure. I have a question for you specifically on your business. How has the bet of globally reducing your financial services business really paid off? It's been a conscious strategy. You've gone ahead and done it in many markets. How has it really panned out?
Well, it's a work in progress. Our financial services team has done a terrific job to bring our asset size down over a relatively short period of time without a lot of disruption. Our investors like that, and so it's more or less a work in progress.
The IMF, I think 2 days back, and it was the World Bank, which has said that emerging markets like India have reduced risks from the global contagion. They need to take care of domestic bottlenecks. Do you agree with that assessment? Because in many ways, I don't think it's a decoupled world. I still think we live in a world where whatever happens in the United States or Europe does impact us. So before I move on to an India-specific question, let me ask you a broader question here.
I agree with your point. I mean, I think the interdependencies exist today like they always have, and they certainly have been magnified in the last 3 or 4 years when you get up every morning worrying about what's happening in Greece, and it's affecting everything that happens in the financial markets. I mean, it tells you, and I don't think that world's over.
From the vice chairman of GE, where do you see India on your global footprint map? You were talking about it. You said 120 countries. You visited 6 in the last 1 week. So where does India figure in all of this? And what are your priority areas really there?
Very important strategic country for us. We have thousands of employees. We have an enormous research center. We have lots of activities that support our work in the Indian market, but also our work globally. So India has been a key strategic country for us for a long time and will continue to be, but big decisions need to be made.
You've given me the cue for my next question. When you say big decisions need to be made, many people spoke about the policy paralysis in India. We in India reported on it extensively. The government wouldn't make decisions. There was a kind of a limbo. If you see the last 4 or 5 months, there has been, governance seems to have come back, and everybody's talking about how reforms have kick-started. Everybody's talking about economic decisions being taken. Is that heartening for companies like yourselves? Because you did say initially that infrastructure is your big bet.
Right.
And there is this to infrastructure that even the Indian government realizes it has to give. So I mean, does that change things for you from 4 months back to now?
I think it's encouraging. But we still have to make the decision. I mean, the fact is there isn't enough power generation in India, and we saw that with last year's blackout. Companies don't want to invest in places where they can't be sure they're going to have stable sources of power. I mean, that's a fundamental building block in the development of an economy. So that has to be fixed. There have to be fuel sources. The investment has to be encouraged. And when that starts taking place, I think a lot of other things will happen that will be good for the country.
I'm glad you mentioned the blackout because some of us lived through it, which is why I want to ask you another question on challenges that you face in markets like India. I'm not just talking about India's specific market, but in a market like India, in that geography, apart from the fact that, quick decisions need to be made, tough decisions need to be made, what are the other challenges that you face on a day-to-day basis? And I'm speaking to you from a global company point of view. You operate in so many other markets.
Well, I think governments in general, they have to make big long-term decisions. And bureaucracies, and I'm talking about bureaucracies in a lot of countries, are not always paid to think that way. If you're in the bureaucracy going fast and taking a risk may not seem like it's in your best interest. And yet, if you look at what you have to do to solve problems in these countries, speed is important. People aren't going to wait. Back to what we talked about before. So if helping bureaucracies make decisions quickly, the minister can say yes. The bureaucracy has to respond. And, you know, in more than a few places, those are disconnected activities.
That's a refreshing thought indeed. There isn't political bashing that has happened here. You brought a new angle to this entire argument. Quick last questions. When we were talking about infrastructure, and please, you know, I haven't done much research on this, but Boeing Dreamliners have been grounded in the United States, in Japan, and also in India. Does GE have a role there? And are you in touch with your clients? What has really gone wrong there?
We don't have a specific role in this problem because we are doing the engines and some of the avionics, but nothing related to the battery. But we stand ready to support Boeing in any way that they might need us. You know, we have great confidence in the Boeing team to work through this problem. This is a challenging job because the complexity of the airliners that we fly on today and take for granted is enormous. But we believe that Boeing and the team at Boeing is going to work through this.
Has Boeing been in touch with you regarding this?
We stay in touch with Boeing because we're working with them
all the time.
All the time.
My last question to you is really about India. What we're seeing in India is that a lot of global companies that have, you know, subsidiaries there, and a Unilever for one, a Suzuki for another, there is this increasing clamor from the parent company for increased royalty. And that has happened in the case of Unilever. It has irked investors a little. They believe, why should you pay higher royalty for products that you have been using, and which is why, you know, there's been this outcry that this is perhaps not the right thing to do. It doesn't happen at an arm's length basis. What is your view on this entire thing?
You know, I don't have a specific view on that case. I think that, you know, investors want to know everywhere that they're going to get a reasonable return on that investment. But I also think that it's important, reinvestment's important too. So you have to balance both the return that you extract from the investment and the need to reinvest because you know, this is an evolution, not a revolution. And if you look at the work that we do in India, for example, we have to take a 10, 20, 30, 50-year view on some of these activities. So we can't be too short-minded about it, you know, when you think about
royalties, really.
Well, and how much money you make, and, you know, we have to think about growing the market. And sometimes it means you're willing to accept a little smaller margin in the beginning to grow over time, and sometimes you may not accept that, given the circumstances.
The naysayers of this argument believe that there hasn't been much technological evolution into this, so why pay a higher royalty? Some people also say that there isn't an arm's length distance between the parent and the subsidiary, and which is why I asked you this question.
Well, and probably all aspects of that are true depending on you know, which angle you come from. I know in our company we spend between $5 and $6 billion a year on research and development, and the only way we can continue to do that and deliver for both our customers and our shareholders is to get a reasonable rate of return on those investments.
After the crisis years, has the GE mantra changed? Are dialogues in GE any different? I just want a last closing comment from you.
I don't think so. I mean, I think we have a different view of the world today than we had 4 or 5 years ago. We always try to get up in the morning and see the world the way it is, but go to bed at night trying to see the world the way we want it to be. I think it has to be a balance. You can never lose sight of the facts and what's happening today. But I think as a leader, as a leadership team, you have to be aspirational too. You have to push forward into uncharted territories sometimes.
We wish you all the very best with the dreams that you have about the world that you want to bring.
Thank you very much.
Thank you so much.